All right, folks, my next guest says, yeah, the Fed's on hold, but the pendulum has swung, and that next move will be a cut. I want to bring in now SMBC Americas, their chief economist, Joe Lavorgna. Joe, so yesterday, I really believe this is the most underreported, or I don't think the financial media really got the gist of what happened yesterday with Jay Powell. I mean, first of all, he's very relaxed. He's got one meeting left. And, you know,
maybe more, Charles.
Oh, maybe more. You're right. Yeah. One meeting with an asterisk. And, you know, it just felt like he was so much more dovish than he was just recently in the Q&A section of the FOMC meeting.
It's the tightening of financial conditions. Largely, though we had a nice equity bounce today, but it's basically a tightening of financial conditions. And the fact that oil prices, which have led to this tightening, lower stock prices, wider credit spreads, stronger dollar, higher rates, that combined with the potential significant hit to demand from higher energy costs, understandably so, is making the Fed more dovish, because if you take it to its extreme, right, the economy will roll over and won't have an inflation problem, we'll have a deflation problem.
But that was always out there. That was always a possibility, and yet the narrative until yesterday was higher oil prices equals inflation risk.
Right.
Leaving yesterday, higher oil prices equals recession risk. And it just felt like he was the one who made it. To your point, we know it. I mean, we've got on the board right now consumer costs from higher gasoline prices. They move up exponentially as gasoline prices go further above $4.
He may have a little bit more liberty, Charles, because he's speaking on his own behalf, not reflecting of the board. When he does those press conferences, he is supposed to take into the totality of everyone. So maybe that forces him more to the center. There are some on the committee that have wanted to hike rates. So he has to maybe straddle that balancing act a little bit more delicately, right, but kind of on his own. And again, every week feels like it's a lot longer than a week. The situation maybe worsens or there's more uncertainty, and he might be realizing, you know what, maybe things aren't perhaps so great after all.
Those others on the Fed, they really seem to entrench themselves on the inflation rate hike side of the aisle. Like, it's like, you know, okay, every now and then a jobs report will come through that may give everyone else like, whoa, we've got to focus on labor. So can they move it when the worst comes in? Is it possible for him to be able to articulate to them that maybe rate cuts are the right thing to do, or are they just steadfast in your opinion?
It'll depend what the board staff is projecting, and I do think, Kevin, one of the things he might want to do, or maybe is contemplating, is the potential to rework the board staff, have a more systematic approach, review its forecasts, which have not been great, and many people have criticized that. Former Fed folks have as well. But Kevin has to really get a consensus on the committee. And I think he'll be very good at it. I think he's very talented in that regard. So if it's compelling to cut rates, yes. If it's not, then he's going to have some work to do. And I'm confident whenever he gets the job, he'll be able to do it.
What should be our biggest concern right now then with respect to the economy? It feels like these new milestones on the debt don't really, have the kind of impact they used to. Maybe 40 trillion, because it's a nice round number, might wake us up again.
Yeah,
what should we be most worried about?
I'd say, well, look, as I've said to you many times before, Charles, the president put in place a very pro-growth, supply-side-led structure that should lead to much faster activity that lowers the inflation rate. A disinflationary boom is what I refer to it, many others in the administration. That, I think, still can persist or present itself. The issue is, where does energy go? Oil and gas prices high and rising, that hurts consumer and business confidence, that takes away cash flow given the frictions in the system, is not going to help growth. So tell me where oil prices peak, tell me when the crisis is over, and then we can backtrack from there. Well, how about if I give you a
scenario? Let's say it's over within a month. Would that be enough time to pick back up that momentum that we obviously had coming into the year?
We could save the back half of the year, yes. Yeah. But again, it's one of those things where economists talk nonlinearities. It's sort of like you go just a little bit too far, you take a situation that's okay, and it gets worse real quickly. It's like baking something. You bake. I'm not a good cook, but I know my wife tells me, take it out of the oven. If I go an extra 30 seconds, it goes from being golden brown to burnt. With the food. So it's kind of the same thing. So it could turn really quickly. We can have a very strong second half of the year if the situation overseas gets resolved.
Real quick, consumer confidence came in much better than expected. It was interesting because inflation expectations went up, which you would expect, but there was a little bit more optimism about jobs. Where are you there?
Well, it could be the Trump tax cuts, the no tax on overtime and no tax on tips, the big refunds that are coming. All that could be a factor.
Yeah. Something is because they caught a lot of folks off guard. That, again, we've got this big issue going on with the war, but that was a huge news item.
You know, Charles, to the extent the economy holds up, and if the markets were to start pricing tightening, investors or speculators should fade that, because we don't think the Fed's going to hike under almost any circumstance. But in the short term, if the data are better, the market may reevaluate the near-term risks. But again, the next move is a cut.
Good stuff.
Thank you.
Joe, I always feel better when you're on the show, especially when you say the next move's a cut. All right, folks, by the way, a reminder, I'm hosting my next